Hey everyone, Shopify CFO really spent some time highlighting the strength of the business, and after its latest earnings results, I have to agree with Shopify CFO in the strength of the business. I mean, if I compare Shopify's latest quarter with some of the other e-commerce companies that reported their earnings results, I mean, there's a really big positive difference in favor of Shopify. So let's go through those figures and the highlights that the CFO mentions here, and then I'll kind of provide some commentary on why I think this is the case and why I think this was so impressive. Starting with gross merchandise value in the first quarter, which was 50 billion, that was up 15% year over year. This is the amount of sales that happen on Shopify's platform or merchants that use Shopify's platform. This was really big to have it increase 15% year over year. Other e-commerce retailers, if I compare with eBay and Etsy, they were relatively flat or down a couple of percent in terms of gross merchandise value. So Shopify really showing their difference here in terms of their gross merchandise value. And they highlight this to resilient consumer spending, with strength in Europe being particularly notable. Yeah, I mean, Europe was a slow quarter for e commerce sales, and the fact that Shopify did good in that region was impressive to be sure. Revenue in the first quarter was 1.5 billion. This was up 25% year over year. So revenue for Shopify is different than gross merchandise value. Gross merchandise value is the sales that merchants attract in the quarter, and then Shopify takes a percentage of all of those sales on the platform, and they also charge service fees, monthly fees for other items and other services that they offer. So that brings us to the total attach rate, which is defined as revenue divided by gross merchandise value. In the first quarter, their attach rate was 3.04%. This was up from 2.79% in Q1 the year before. And I will make a note here that this is really good news for investors in Shopify stock and other e commerce retailers, in that competition is easing. Merchants are forced to pay higher prices now because Shopify raised its fees. You notice here their attach rate increased. eBay has been raising its fees. Etsy has been raising its fees. Amazon has been raising its fees, and I could go on and on. E-commerce platforms raising fees on merchants. So there isn't anywhere merchants can go really that are not raising fees on them. So it's not good for merchants, but it is good for investors. The CFO goes on to say, we're beginning to see the impact from initial cohorts that were part of the free and promotional trials that began to roll out broadly in October of 2022. These merchants comprising the initial cohorts from the trial experiments are demonstrating very positive results. That's really good news. Also, Shopify rolled out this promotional plan where it allowed merchants to sign up at Shopify for an extended free trial. And what Shopify CFO is saying now is that those free trial signups are converting into paid signups at a very attractive rate. So those free trials are going very well for Shopify, and that's good news as well. So in January, they introduced pricing changes to their standard subscription plans. In other words, they increased prices like all of the other e-commerce retailers, like I mentioned. The pricing changes had minimal impact in the first quarter financials, as the full pricing changes did not take effect until about a week ago. So in the over the next several quarters, Shopify stock investors will start to notice the benefits of these price increases. Finally, I'll end with this point here. Gross profit of 717 million for the quarter, and gross profit margin 47.75% in the first quarter, compared to a gross profit margin of 53% in the quarter. But if you exclude the impact from the acquisition of Deliverer, then Shopify's gross profit margin would have been much better. And given the fact that they just sold Deliverr to Flexport, that's really how we should look at Shopify's business going forward, is excluding the impacts of Deliverr. So overall, Shopify, I think, had a really good quarter, and the CFO highlighted some of those big picture items that demonstrated Shopify's impressive performance, much better than eBay, Etsy, and even Amazon. I would argue Shopify outperformed all three of those e-commerce rivals in the most recent quarter. But that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.